Greetings to you all. My name is Tumelo Chitindi Bwaya, the Business Development Manager at the American Chamber of Commerce in Zambia. The Chamber seeks to promote trade and investment between Zambia and the United States of America. One of the ways in which we do this is having an economic outlook at the beginning of the year to give insights to our members on what we expect the economy to look like. Stay tuned as we join the discussion.
Good morning. Thank you for joining us for the American Chamber of Commerce discussion on the economic outlook for Zambia. We are joined this morning by Muchisunge Zulu, who is an analyst with the Zambian National Commercial Bank. Good morning, Muchisunge.
Good morning, thank you.
Okay. Getting right into it. Everybody is keen to know what the outlook is for Zambia. There's been a lot of political sentiment and talk about where things are going. But I would like us to start perhaps with a look in the past to know where we got, how we got where we are. Inconsistent energy supply was seen in the past, circa 2015-2016, to have had a significant impact on the economy. We have seen this issue come back with us seeing up to 8 hours of load shedding previously. Is the Kariba situation a real problem?
Okay, thank you very much. So, first of all, energy is a very critical component in any economy, and they pretty much say it drives the wheels of economic growth. There is no sector that does not use energy. And I think that the focus will now be on energy generation, which is power, as opposed to petroleum. So is the Kariba really a challenge? Absolutely no. 2015, Africa had a drought, and the concentration risk of Zambia in terms of energy generation is pretty much predominantly hydro. So about 87% is hydro generated power. And in a situation where you have a drought, it's very clear that there will be bottlenecks and there will be those issues. And 2015 was clearly a starting point and a casing point for Zambia. The Kariba dam levels were low, and it affected generation. We had load shedding, and it pretty much impacted businesses that much. So the energy issue in Zambia is really a manifestation of how far energy reforms have gone. And I think as far back as 2015, the discussion around a cost of service study to understand the entire value chain and what would have been improved to ensure that Zambia did not find itself in the same predicament. Interestingly, the first cost of service study was done. Then we had a second cost of service study. And if you look at some of the results that came out of the study itself, the green paper was shared, is that Zambia's energy needs are going to grow about 95% by 2049. It's also linked to population growth. The faster your population grows, the more in demand then creeps back into the market, and production just goes up, and all these prospects that Zambia has in terms of pushing copper production to 3 million metric tons. Copper needs a lot of energy, and just mining in itself gobbles about 50% of the grid. Zambia needs about $14 billion investment to get to that level. That's about 4,000 gigawatts or megawatts, and that's significant. So it's really about investment in the value chain. We have a monopoly, state monopoly energy generator, that's your ZESCO, that's been supplying power. But then you also have independent power producers. So the way the way the value chain has been structured is that your power producers have been supplying, selling power to your power utility and firing into the grid, and your power utility is the one that owns the infrastructure. So because of the pricing it's very critical, and it's come out of the cost of service study that it's not attractive to invest in power. So the question is, what can be done to attract investments in power? And then there's also been a discussion around independent power producers that were selling power to the state utility that were not being paid. It becomes very difficult to operate. Thank God for the likes of Mamba. I think the Mamba Power Project has been very, very helpful in the Zambian scenario, where whenever they fire into the grid, it reduces the deficit. Look at just what happened a few months ago. Load shedding was 12 hours. Mamba came on board, fired an extra 150 megawatts. That's still reduced. We still have sort of a deficit, but it was plugged by imports of power from, say, Mozambique. So yes, it's a good thing to plug power, the power deficit with power from Mozambique, but it comes at a cost. We're in the labyrinth of fiscal issues, debt restructures, and if we start to import power, it just adds additional strain to the fiscals. Energy is also tied to the state of the world. There's a very strong decarbonization drive. So because the world is exposed to climate risks, of course the Caribbean is not full. Dam levels are low because it hasn't rained much. And it hasn't rained much because these are climate risk patterns that we are seeing. And because of that, there's been a shift to investment in renewable energy. We're talking solar and other energy sources. And that's the discussion that the world is actually in. So some of these issues that we are seeing are not unique to Zambia. They're actually homogeneous to Africa. South Africa is in the far west off position. So I think that it is time for some of those radical decisions to be made around what needs to be done to make sure that the energy sector is sustainable.
So now, speaking of the radical decisions that need to be made, are you of the view that perhaps we need to restructure the energy value chain? And there's been talk of breaking up the monopoly of ZESCO in power generation and transmission. What are your thoughts on that?
I don't think that the solution to the energy problems is the dismantling of ZESCO. Let us think about how the nation can attract investment in power production. There are a number of investors that are interested. I mean, you have investors that already exist in Zambia, but for them to grow to that significant scale and start firing their power into the national grid, it also it will take the correct pricing. I mean, you don't get into business if the pricing is not right. You've got the likes of CEC, they're doing great. I mean, they're even supplying energy to DRC. So I think that the biggest discussion has been around pricing. What tariffs should dictate the energy markets? What are optimal tariffs? And I think that's been the discussion historically for Zambia. Until we get it right on tariffs, investment in energy will still be in the balance and will always be in this position and always point to hydrological pressures as having been the reason for this. So I think that what comes out of the cost of service study is very clear. The energy reform process needs to expedite. I think it's something that has been left open for many years, but it's now time for action. I mean, it shouldn't have taken the head of state to have to intervene. This is something that people that are below the head of state should be tasked to run with. So, in a nutshell, those are my views on the energy crisis in Zambia.
Speaking of the intervention by the head of state, we have seen pronouncements that have been made just in the recent past. I think it should be over the last 3 to 4 months, when we saw the president going to the United Arab Emirates and signing an MOU and joint development agreement to facilitate investment into energy in Zambia to the tune of approximately $2 billion. do we need to diversify the energy mix as we look to attract investment into energy?
Yes, we do need to diversify the energy mix. And look, I'm a risk professional. And whenever there is risk, when you diversify, you spread your exposures. Yes, we do need. Like I did mention in my earlier remarks, we're so much concentrated for hydro, power generation. And right now, very, very susceptible to climate patterns and those changes. So we do need to diversify. We can learn one or two things from entities that may not even have as many water bodies as we do, but they don't talk about power deficits. The 2 billion arrangements with the UAE, those are the kinds of conversations that we should have been having years back. And if we had those discussions earlier, I don't think we would have been in this predicament. You see, what's so painful is that if you don't get this right, it affects your growth projections. It affects everything else within the value chain. It affects manufacturing. So the energy discussion needs to be right at onset. So yes, we need to diversify.
Thank you, Mutesunge. We'll just take a short break and then get back into it. And we're back. So, picking up from where we started about diversification and everything. So we saw that the European Union has announced a deadline of 2035 for vehicle manufacturers to transition towards manufacturing electric vehicles to reduce carbon emissions and all that. Tied to this, the Zambian government and the government of the Democratic Republic of Congo are positioning our two countries to take advantage of these opportunities by the signing of an MOU for the development of electric vehicle batteries. How do you see this memorandum of understanding translating into jobs and adding value to our economy here?
Okay, thank you for that question. So yes, there's been that deadline that has been put by the European Union, and first point of call is that's a market for our copper and cobalt. That's for both Zambia and the Democratic Republic of Congo. There was a similar MOU that was signed between Zambia and the Democratic Republic of Congo in May last year. So yes, it's a good thing, and there is that realization that we do harbor and keep resources that are very critical in the value chain for the electric car battery manufacture. So it does spell positive prospects for, say, if industries are going to be set up. That's number one, because the value chain, of course, it should start from the time that the copper is mined, who is exporting that copper, who owns the copper that is being exported. It's a wider discussion. You see, it takes us back to who owns the mines. Are these mines owned by locals, or are they owned by foreign entities? Because I think that for a full value chain to translate into economic gains that will actually benefit the average Zambian, this piece really needs to be unpacked. So yes, it's a good thing to sign a memorandum, but actualization of what it means is also critical. So not to say that you can't have foreign entities on the mines. They can own the mines, but I'm sure these entities will have to hire locals. Locals will have to be skilled to be able to deliver to expectation. So I think that the question is, how long will it take for us to see maybe a factory in Zambia, a manufacturing entity that will be able to produce even an input into an electric car? Or the question is, what will we be exporting? Are we going to be exporting copper cathodes? Or should we be thinking about adding more value and exporting copper wires? So I think that that's a piece that aggressively needs to be attacked. But until we get there, it's unclear. But what's positive about it is you always start from somewhere. But I think critically, what we have suffered from all these years is implementation. We've got the right ideas, we have the resources, but translating these ideas into tangible and sustainable means has been a challenge. And I'm hoping that this time it'll be a different point of construction.
So put differently, it's time to walk the talk.
And act more.
Yeah. Okay. Now let's get to another side of the energy discussion. Fuel. Previously, fuel was subsidized, and we saw a bit of, price stability in terms of fuel. We have now changed our model to where the subsidies have been removed, and there's monthly reviews of the fuel price. What is in your view, the impact of this new model on the economy?
I always struggle to answer that question because rather than by saying this model is what is working versus that other model, allow me to deviate a little bit. It starts from why did we have subsidies and why were the subsidies removed? Subsidies are a good thing if you're paying a low price and you're the one that's benefiting from them, but they're a cost to any government. So it really takes us back to economic principles, allocation of scarce resources. Resources have to be allocated within various competing needs. So a simple question I've always asked is, would you rather pay a higher fuel price, but then that buffer, an amount that was cushioning and which is a subsidy, is now going to a hospital where you are guaranteed of finding drugs and having the best medical care, or that portion is actually going to education? So would you rather pay a higher fuel price and have your child have the best education? To any parent, they would rather sacrifice for their children. Fast forward, I think that answers the question why we had subsidies. For quite a long time, what we thought was stability was actually monies that was actually a cost to the government. And this same government was grappling with fiscal issues, fiscal deficits, and all those economic challenges that we had as a nation. So the discussion was around Zambia is in a tight spot in terms of fiscal. Resources are scarce, but how can the authorities use the scarce resources to ensure that there is maximization and optimization of these resources to attain growth? There were social issues, hospitals needed drugs, the education sector needed funding. So part of the decision was, let us ensure that we have social safety nets. And when you take care of the socials and then let these other sectors, be allowed to be ruled by market forces. That was a discussion around fuel. So having to adjust your fuel prices every month because you have a price review is also it's also a function of what really drives a fuel price. Crude. We don't have crude in Zambia. We import crude. So we are price takers. And with everything that has happened in the external environment, it's chaotic. The Russia-Ukraine war affected supply-demand fundamentals. There was the COVID issue, supply chains, and because of that, crude prices did go up significantly. How do we pay for that fuel? We need dollars. And you know that the dollar discussion, we are not the center of excellence for the United States dollar. So when there's a strong dollar environment, you bear the brunt of that. So the cost of your exchange rate plus the cost, the price of crude on the international markets, that's your internationalized Brent and your WTI US crude futures, we become price takers. And then you have a value chain and you have people that are in business. So it becomes expensive, and because of that, there's been volatility. This is not a problem unique to Zambia. It's actually homogeneous across its peers. If you look at the likes of Ghana, if you look at the likes of Egypt, Nigeria as well, similar issues, price pressures are what we are facing, and it's affecting manufacturing. Now the question is enough being done? And I must say that there are initiatives that have been promised. For example, we've realized that, okay, there was a Tazama pipeline. There were issues around that. Then there's Indeni. I only got to discover that Indeni is not a refinery. We used to call it a refinery, but there will be ethanol blending happening there. So with all these measures like your ethanol blending, where there's talk around saying, we produce ethanol in Zambia. So if we can ethanol blend at Indeni, then we then tend to cushion some of the effects of the volatility in your crude prices, and then there are opportunities to lower fuel prices. Diesel is now going to be transmitted directly using the Tazama pipeline. So that pipeline will be for diesel directly, as opposed to previously what used to happen. So there are all these initiatives that are there, but there are only opportunities to lower the cost. That should ideally translate into reprieve on the fuel price. There's also been talk about the value chain, that there was escalation of costs, too many taxes along that chain. So you pass on a cost from one stage to another. What was it leading to? It was leading to huge costs. And that is part of the energy reforms that I was talking about. We started with power. Now we're talking about petroleum. Those reforms, years and years have passed. Reforms were not taking place. But I'm glad that in the last 1 year, we've had a greater push towards pushing for those reforms to happen. When I was young, I'll tell you one thing, I grew up in Livingstone. Zimbabwe fuel used to smell like cologne. It came from sugarcane, ethanol, and those are the types of discussions we would like to be hearing. Why not, think about, you have your Zambia sugar in Mazabuka. Why not think about projects that will, think about usage of ethanol as opposed to dependency on crude? And remember, with the climate discussion, I know pretty much fuel and combustion will still pollute the environment, but at least you can be able to demonstrate that I don't think it will pollute the environment as much as using fossil fuels. So that has been contention within the sector. So truth be told, yes, it is painful. We're where we are. Does the nation have reserves to be able to subsidize? No, we don't. Like I mentioned, we're in the labyrinth of the debt restructure. We've got fiscal issues. We've got debts to think about. But the question is, with the little resources that you have, how can you ensure that the needy are taken care of? Social issues are prioritized, but at the same time, growth is being effected. Because ultimately, it doesn't mean that if you are hung with debt, then the economy must come to a standstill. No, we need to find ways. But the key issue here is that resources are scarce.
Okay. Now, the Zambian economy was seen to rebound in 2021 after a dip, with GDP growing at 4.6% from a contraction of 2.8% during the COVID pandemic. Various factors drove this economic recovery, including, the post-election market confidence, increased copper prices, and the like. Can we expect the economy to continue growing? And if so, what is the basis for that projection?
So growth in the Zambian economy has been a function of, I think you mentioned one aspect. You talked about the rally in the currency. Of course, it was confidence, and the market was trying to show you that investors were responding to a subsiding in political risk factors, because before August 2021, Zambia, I don't think, was in good boots with the international markets. So with that confidence then coming in, what we did see was businesses trying to claw back lost growth. Remember, we were also coming from a COVID-19 pandemic where businesses had practically shut down. So growth had to be clawed back, risk appetite was coming back into the market, your copper prices were beginning to tick up, and it looked seemingly positive, and the outlook still remains positive. But the elephant in the room has been debt. And in the last 1 year, again, I must mention that there's been great attraction towards getting Zambia onto an IMF deal, which was the Extended Credit Facility. And with that, so many thought that getting onto an IMF deal would be the solution to all the problems that we have. There's only much an IMF deal can do. So yes, got onto an IMF deal, but an IMF deal was then a precursor for debt restructure, which is the next stage. So we have a situation where you have investors that have been sitting on the fence, waiting to see. So there's been ambiguity, there's been uncertainty around what's going to happen next. We got onto an IMF program, there's been support from multilaterals, we've seen the World Bank support Zambia, and with the IMF as well, the package came with milestone injections where we're now where we are. But the next stage is, when are we going to restructure that debt? So markets tend to price these issues. And because the market is waiting, when you're in wait and what you're waiting for is not in sight, you get fatigued. And that's exactly what you're beginning to see. Because that clarity, people made projections thinking, okay, maybe by December 2022, debt would have been restructured and all that. And the discussion has been that once we cross this milestone, the FDI that Zambia will get will be significant. Not to say that FDI is not coming into Zambia. It is coming into Zambia. Zambia is in a far much better position now than where it was a year ago. We've seen interest in the mines, for example, especially with the strong decarbonization drive, the electric car era. People do understand that the likes of lithium, cobalt, copper are on demand, and you're seeing so much interest. But the interest in the mines, for mining projects to actualize, for example, it has been about exploration investment. Exploration investment was very low in Zambia. Why? Because of the mining tax structure. Because the mining tax structure has been changed and it's been improved. You expect that propensity for exploration investment has actually increased. So with years to come, and I guess that's where those projections around 3 million metric tons are coming from. Mining is not the only sector for Zambia. There's been agriculture, for example. If you look at the agri numbers for 2022, you'll actually see that agri exports were just shy of $1 billion, which is $1 billion. And that's remarkable for Zambia. And there is great potential for it to exceed. If I explain to you what actually caused the motivation for exports in the agri sector to go up, it's actually an autopsy effect of the Russian-Ukraine war, which caused global grain dislocation that pushed commodity prices up. So you have farmers that are now motivated to take advantage of higher commodity prices, and they're exporting. So you can actually see that any crisis does have silver linings. There have been those opportunities that maybe some may not see. You have entities in Zambia that have actually positioned themselves very well for wheat exports, the likes of Zambia. They got into that agreement with the IFC. I mean, it's in public domain. So all that is actually pointing to some of the opportunities that Zambia can harness to grow. For the SME sector, it's another discussion, but I think that in the history of Zambia, I don't think that there's been a time when institutions, not only FIs, but even DFIs have come up and talked about products that would be very unique to support SME growth. Just the assistance that SMEs got during COVID is remarkable. That just shows you how much a nation can go out of their way to support businesses. Can something more be done? I mean, look, more can be done in the SME sector. You do know that the SME sector has been a function of high interest rates and that kind of discussion. But let's also not forget that lending is a business of trust. Would you give someone money that you don't know today that you met on the street? The answer is no. So there's that level of caution, So I think that the pace at which this nation is moving and addressing some of these issues is actually very encouraging. Look, macroeconomic indicators do not just improve overnight. It takes time. Pick a leaf from our friends, the likes of China, Singapore, to get to where they are. They planned long term. So much as, yes, individuals, businesses will expect that they want to have this development overnight. It doesn't come overnight. But it comes with the right discussions, the right conversations, the right actions being implemented in an economy to drive growth. So for Zambia, very, very interesting. If you look at your manufacturing, manufacturing in Zambia is also a function of your inputs. And some of those inputs are important. So if your currency starts depreciating, the way the kwacha has depreciated, you expect that your input costs will then also increase. There was a discussion around lack of money. If you read the Purchasing Managers Index, I think it's now out of, it was in the doldrums for the last 3 months, but it's out of the doldrum territory. It's now at 50.8, 50.3, which is expansionary. So some of the issues that you will see when you critically look at it, it will tell you that there's demand issues, there's employment concerns, and there was lack of money. But I'm happy to report that the last report that came out, you could actually see that the economy is trying to grow, but there are other factors that are stifling the economy, and they're circling around currency, and there is genuine appetite for this economy to recover. But as compared to where this country was a year and a half ago, and historically, I think that the right things are being done. It's probably just a matter of time. And if you compare Zambia to its peers, you'll actually find that it's actually a more resilient economy. So if you look at Zambia just in isolation, you would think that things are dire. But if you look at what's happening globally, other economies, emerging markets, Zambia is not the only entity with debt. I was just reading an article last night around 75 emerging market nations, including Zambia, or China, $256 billion. And there's been this push to say China is not coming to the party. I can understand China on one end. China is not looking at one country in Africa. When China is dealing the debt discussion, they are looking at the entire continent. So one treatment should be homogeneous to all. But look, like I said, it's on different sides. When you sit on one side, you would understand, and then when you are the one that is owing, you are feeling the pressure, because there's this genuine coup. I mean, David Malpass had issued a statement. I was watching the same interview where he said, the longer China takes to come to the party, the dire the situation is, and emerging markets are feeling the heat.
So I think let's put a pin on it there and take a quick break, but we'll pick up the debt restructuring issue when we come back. back to the insightful discussions with Motisungia here. So previously, before we broke off, we had touched on the debt restructuring, as well as the role that China has to take in this restructuring. There is market sentiment, I think locally, that currently the government has perhaps focused a little too much attention on the West and has neglected to engage China. And possibly this is why China is not coming to the table. What are your thoughts on that, and what do you think China's role is, and how is it going to play out?
Thank you.
Loaded question, I know.
You know what? This is how I understand it. The way China does things is very different from the way the West does things. Chinese way of doing things is more a culture norm. The Chinese, like I did mention earlier, is that I don't think they will negotiate debt at country level. China is not looking to Zambia, to Tanzania, to Kenya, but is looking to Africa. So when they look at the aggregate and they come up with a solution, it will be like this solution is for everyone and opposed to one country. Imagine if they came up with one solution for Zambia. Then other nations that owe them money will raise their hands and say, oh, you know, exactly. So it is about a dry point of construction that most of the African nations' debt positions are a reflection of geopolitics. What I mean is that a portion of their debt is with the West and another portion is with the East. And that would make anyone think that that has become a ground for geopolitical play, or it's a geopolitics turf ground, could call it, use your words. So yes, there has been delays, and the sentiments coming from the West is that China has taken a little bit more time than usual to come to the party. And let's also not forget that the common denominator is the common framework, G20. Like I said, the Chinese take their time to understand implications and to be able to come to the party and agree to restructuring terms. Do not also forget that these nations that emerging markets are asking to either cancel, restructure debt, are also dealing with issues in their own countries. China, for instance, they've got a property market issue. Their property markets are, volatile and they're in balance. They just released their growth numbers and the whole world is crying around their modest growth target. Their GDP growth rate target for 2023 is 5%. In normal years, you expected China to push 6.5% and above, but they have sent a signal that they are also dealing with issues in their country. So that $256 billion that emerging markets owe them, they're also thinking of the best possible way in which that restructure can take place. The West is slightly different. From a culture perspective, the West is open. You'll have Janet Yellen taking a trip in Africa, you'll stop over in Zambia, next day in Rwanda. And look, when you're analyzing these issues from like an analyst and you're sitting on the other side of the fence, you can make so many inferences by thinking because Janet Yellen was in Zambia, then it means that Zambia is more loyal to the West than the East. I don't think that would be a prudent assumption to make. We just need to understand the two parties from a cultural perspective. But what I'm confident with is that clearly there is a nation and there are nations that do acknowledge that they are in these debt situations that need to be addressed. Coming back to Zambia, part of the debt, and I think what I would call the most toxic would be dollar debt. Dollar debt is complex. You have a whole array of Eurobond holders that you need to convince to accept to restructure. These are people that, technically speaking, lent you money and they're expecting payback, right? And we're going back to them, asking them to restructure. I'm sure with that analogy, you can understand the complexity of discussions. It's not an easy kill. But this restructure discussion, like I said, because it's taken long, markets are nervous, wary, and fatigued. And that is the reason why I mentioned when you have uncertainty in a market, you will tend to see certain variables moving in a particular direction. Your currency, your asset sell-off pressure. If you listen to the MPC communique by the central bank governor, there are reasons he gave for depreciation in the currency. He talked about the protracted debt restructure. The delays have created uncertainty, and because of that, when there's uncertainty, you know what investors do? They prefer holding their monies in dollars. That's dollar demand I'm trying to drive to. The demand for dollar in the Zambian market is very high. Why? We're net importers. To get anything imported into Zambia, you need dollars. Number two, we are part of a cycle, your agric pattern. Because we've not yet gotten to the point that we can manufacture our own fertilizer. We import fertilizer for the FISC program. That's dollars. When those letters of credit mature and you need to pay your suppliers, you pay them in dollars. Number three, one factor that everyone forgets about Zambia, because you are a net importer, growth for the Zambian economy means that your imports have gone up. You need dollars. And lastly, holders of Zambian treasury bills and bonds, because they're very attractive. There's nowhere in the world you're going to go and someone's going to pay you 27% on a 5 to 7 year bond. That's very lucrative, even in dollar terms. So because you have about 33% of foreign and offshore investors holding Zambian government paper, when that paper matures, you know what's happening now? They're not rolling over. They're externalizing. That's capital flight. And that is what the governor meant when he said holders of government securities. So when a coupon comes, for example, every 6 months you get a coupon on your bond. The question is, do you want to roll it over in a nation where there's a bit of uncertainty and you're uncomfortable? You know what the guys are doing? They're getting that money and saying, no, I'd rather repatriate it. To repatriate out of Zambia, you need foreign currency. Do we not have reserves to cushion this pressure? We do have reserves, but there's a cost to stabilizing your currency. If the central bank wanted, they would stabilize that currency to even 15 today, but it comes at a cost. That cost is selling dollars on the open markets. How long will you sell dollars on the open market to keep a currency at where it should be? It's a cost. You will deplete your reserves. So, to maintain the 3 billion reserves the central bank has, sometimes the central bank leaves things to market forces. So, truth be told, maybe this price is actually what the real value in the currency should be. Because remember, in an open market, price of a commodity is a balance between your supply and your demand without tampering with anything. But you do know that in any economy, there's always that level of intervention. Why is the central bank tightening rates? We saw the statutory reserve ratio adjusted 250 basis points to 11.5%. It's for the first time since December 2019 that the SRR was being tightened. Your MPR, which is your benchmark interest rate, was adjusted upwards 25 basis points to 9.25 for the first time in 1 year. What is that telling you? So we need to start looking at market variables as an indicator. What are they telling us about the health of our economy? So it means that we could be on a bearish interest rate trajectory, and that's what it means. Of course, no one wants higher interest rates. No one wants to pay higher costs, because if your curve goes upwards, then it means that your cost of lending is also going to go up, and then you have various classes of businesses not being able to access loans. But I hope that that breakdown does give that context, all the way from a delayed debt restructure to how it has translated into the markets through FX and your interest rate mechanism, and some of these actions that you're seeing the central bank then instituting to just help contain these prices. It could have actually been worse. You can imagine. I mean, if the governor could report and say in the fourth quarter they were able to sell in excess of about, was it $350 or $430 million, and your currency is still where it is, what is that telling you? It could have actually been worse.
You know, I like the point that you've made about explaining the reasons for the depreciation of the kwacha, and you actually addressed my next question. But you've also touched on the cost of borrowing, which now brings me to SMEs.
Okay.
There's been a lot of lip service, and I think this is the sentiment by SMEs, to say SMEs, we are always given lip service to say you are the backbone of the economy. Economy cannot grow without SMEs, but we, the SMEs, are not seeing deliberate steps being taken to encourage our growth. And part of the complaints by SMEs, I think they're twofold and interrelated. One is the amount of domestic borrowing by the government, which has been viewed as being a factor in driving interest rates up. So the sentiment is that the government is crowding out domestic borrowers from the market. Then the second effect is that the cost of borrowing in the Zambian market is too high for SMEs to grow. So that also brings in the role of the banks in the market. How do you see this playing out for SMEs, and what is the solution for them?
Thank you for... I would say that's the hardest question you've asked me today. And that's the question I find the hardest every interview that I attend. But I'm glad that you acknowledge that government borrowing is the starting point. So, if I'm a bank and I'm going to lend funds, there's a cost to which I attach to lending those funds. I also get these funds from somewhere at a cost. I have depositors. I can also borrow on the open market. But borrowing from the open market is a function of the curve, which is your term structure of interest rates. What determines your term structure of interest rates? You mentioned to me that there's overcrowding. Who overcrowds the market? It's the state. So the state borrows from the market, right? And people are able to invest in treasury bills and bonds. That is government borrowing. So when a nation is in a fiscal quagmire, as Zambia is, the price they are willing to pay for money that they will borrow from the public is what determines where the curve is at. When you're in a desperate situation, you can pay anything. I'm trying to drive to the fact that government borrowing is what determines the shape of the yield curve. And this is the same yield curve with which banks are using to price money. And if this is the same yield curve that you're using to price money, how will you get that money to an SME at anything lower than that? Bear in mind that the bank is a business. So you see how addressing fiscal issues eventually addresses the level of the curve. Address fiscal issues, the curve comes down. Happy days for all, SMEs will be lent to. But banks have still been very innovative enough by partnering with other sources of funding to lower the cost to SMEs. In this market, I won't mention banks' names, but I'll just tell you that there's a number of banks, if you followed, that have partnered with, I think USAID. There's been the likes of European Investment Bank. The list is endless. They are partnering with these DFIs to be able to get cheaper money to support the SME sector, and they're able to lend to the SME sector at discounted rates. There are products in this market that have been specifically tailored for women banking. This is International Women's Week, right? Mm-hmm. You will see a lot of those products this week. I don't think that there is a time in history in this country that institutions ever tailored products for women. Banks are doing that. That is innovation. So there's a lot of financial innovation that is taking place. There are credit guarantee schemes that have come up that are able to, to stimulate institutions to lend to SMEs. They say, go lend to SMEs. Should they be defaulted, we're going to take up close to 50 to 75% of those defaults. That's to encourage banks to lend to SMEs. Are we where we should be? No, we are not. Has enough been done? No. But something has been done. So we must not think that banks are out there to just get people's money. But the role of a bank is to partner in the growth of any nation. And it is true that SMEs are the backbone of growth. We were just talking about mining. When I talk about I get excited when I talk about mining. Please forgive me. When I talk about mining, and when mining is booming, my concern is not really on the mines. It is the downstream business that comes with the mining boom itself. Because imagine, think of the copper belt booming. It means that all those guys they call suppliers, the guys who supply gloves, the guys who supply food, accommodation, housing, all those booths you find around, that's an ecosystem. Maybe what we need to focus on is what are the key sectors that need to be attended to so that that ecosystem is firing on all 6 cylinders. That's how we need to look at it. Then also, as we speak about this, let's also bear in mind that lending is a business of trust. I gave you an example. If I came to you and I asked for 1 million kwacha, and you met me for the first time, would you give me that 1 million kwacha? No. If I asked you why, you probably tell me, Mutisunge, I don't know you. Number 2, what if you run away? I don't know where you stay. So let me deviate a little bit. I like to talk a lot, but there are certain things that need to be in place to help this trust description. A good example is your ID. You know this KYC that banks talk about? Exactly. Do you know that a simple project such as digitizing your NRC is going to sort a lot of issues? If you fly to a developed country today, you are at the airport. Just by viewing your passport, they are able to tell who you owe money. Do you have any account with Woolies? You know, like in developed nations where people get things on credit, right? We don't have that here. So I can go to an institution and say, this is my ID. Is there a way of me determining authenticity of that ID? No. So just those small things in curbing fraud, addressing a person's identity improves trust. You know why it's difficult to default on a facility in the likes of Sweden and these other countries? It's because when you default on one facility, then this same ID is tied to your ability to have power in your house, your kids' social issues and everything. So it forces you to be on the right posture. So I would also urge, you see, there are genuine SMEs, and then there's also behavior of other SMEs that has then, caused even those that are honest to be thrown into the same bucket list. There are people that default. I mean, there are institutions that lent out to SMEs and those SMEs never paid back and they ran away. A bank has shareholders. So the same way an SME is trying to run a business is the same way the bank is also trying to run a business. So it's a relationship that is symbiotic in nature. Do banks need SMEs? Yes, they do need SMEs. Do SMEs need banks? Badly. So I hope that this provides context. So there is innovation that has taken place right now. But what I believe is that there is further latitude for that relationship to improve, for the cost of money to actually come down. But ultimately, I thought I should tie fiscal issues to trust, to where we are, to even simple things such as having your ID digitized. I should be able to know what is tied to your ID. Until we get to that point, we will be going around in circles.
Now, as a by the way arising from this discussion to do with government crowding out the market, and just very briefly in closing, some people lobbying have said perhaps it's time that we looked to limit government's domestic borrowing. So say, for example, if you're looking at the domestic lending ratios that banks have, you could limit it to say, well, you could only lend to government to the extent of maybe 60% and then leave the rest to the market, so that you free up more capital to the market that actually drives the economy. Very briefly, what are your thoughts on that type of solution?
Can I be honest with you? It's already there. It's already there. Maybe the issue is implementation and who tracks it. This actually takes me back to, it's not your Public Finance Management Act. There are recent debt contraction rules that were tabled last year that actually prescribe for any debt that is contracted should be ratified by Parliament. Any bank does have a risk appetite statement. And in their risk appetite statement, there are sectors, there are sector caps. Those sector caps are unique to every bank. Maybe what you're asking is that can we have one sector cap and exposure to the sovereign? But then again, this is something that would need to go back to the fiscal authorities on the money, not on the monetary side, on the fiscal side, as part of the debt management rules. To some extent, the question you've asked me, that is already there. But maybe the question is, who monitors concentration risk? But then there will also be issues around, would you want to dictate the concentration risk of a sovereign to an entity? Because ultimately, in a free market economy, people choose who they pretty much want to be exposed to. But that's risk management. But I'll tell you that that is already there. It is there. There are sector caps. I'd be shocked if there was an institution that did not have any sector caps. I mean, look, these things, ultimately, it's about transparency. I know that in developed countries, there is visibility of some of those numbers, and I don't think that most of their entities are borrowing from private banks, but yes. But it's a very, very good point that you raise. Maybe at the next submission, even as Lars can push it in, because you guys are closer to what you call these statutory issues and that. Yeah, if look at that. But I know that the discussion, in fact, this discussion started 2 years ago, where I think it was actually discovered that the government was borrowing too much money. There was that overcrowding. And look, I've heard the term overcrowding, I think, more than a million times. To say when you overcrowd, then you are choking the private sector and all that. And at the end of the day, they always set a cap. But it's always a decision point between if you're in a dire position, and that is the only market you can access funds, and then there's a cap. What do you do? It's food for thought.
Thank you for that, Mutasunge.
Thank you so much.
It's been a very enlightening discussion. I think we could have gone on all morning. There's so much to unpack on this issue. So perhaps we'll have part 2. And thank you for watching, and good day.
Thank you for staying tuned. We hope the discussion was meaningful and insightful to you. The Chamber has a number of activities that are lined up for the year 2023. Be on the lookout and follow us on our social media platforms and our website.